Are you curious about what's happening in the Orange County housing market? You've come to the right place. Welcome to Market Watch. Hey everyone, welcome to this episode of Market Watch. I'm Jason Zwolak of the Zwolak Group with First Team and Christie's International Real Estate, coming to you from Irvine here in Orange County, California. I hope you're all having a great week. For those of you tuning in for the first time, I take a look at what's happening in the Orange County housing market, and I look at three factors that are driving the market: interest rates, supply, and demand. If you like this video, make sure you subscribe, hit the little bell so you're notified every time I post. I post videos every week about what it's like to live here in Orange County. We talk about restaurants, businesses, we talk about the market, neighborhoods, cities, everything that you need to know if you're moving here or if you live here already and just want to know more about our great county. The first driving factor we're going to look at is interest rates. Our interest rates have been historically low for some time, and they're really pushing buyers into the market. Some buyers that have wanted to wait until the end of the year or a little bit later that are still financially able to make a move, they're jumping in now because it can save them so much money down the line. So that really is pushing our demand right now. When we look at supply and we look at demand, I really want to show you guys a couple graphs and give you some data that can really show you what's happening here in Orange County. So let's jump on the computer and check that out. Now that we've taken a look at interest rates and how they're driving the market, let's look at the other two driving factors that we're going to talk about: supply and demand. We're going to start with supply. I want to thank Stephen Thomas. He does great reports on housing. We get all this information from him, and it really helps us keep a finger on the pulse of the market and get this information over to you guys. So when we look at the Orange County active listing inventory year over year, so this is our supply, we're hovering around 5,000 homes, right? That's a 52% drop compared to last year when we were about 7,500 homes. Okay, so we saw a huge drop in inventory leading up to the COVID-19 issues that we had and the stay-at-home order. Inventory was moving slowly. Once the stay-at-home order hit, it really just kind of straight lined. There wasn't a lot of inventory coming on the market. April and May, we've started to see housings start to come back on the market, and people are looking to sell again. Really, when we look at these inventory levels, the supply levels, we'd have to go back to 2013 to see levels this low. So looking at inventory, so this is our supply. Now I want to look at demand and see what the difference is there. So we look at demand. Our demand was really high moving into March. So we were in a hot seller's market. Homes were flying off the shelf. And then COVID-19 hits. Once COVID-19 hit, boom, we saw a sharp decline in demand. Our demand actually hit levels that were seen in like 2007 during the Great Recession. Now, in the last 2 weeks especially, we've seen a resurgence in demand. And over the last 2 weeks, we saw a 38% increase in demand in Orange County. So these are homes that are going into escrow. 38% more homes in escrow in the last 2 weeks. Really impressive. So that's why we're seeing this V recovery. And one of the reasons that we're going to see this is because that inventory level has not increased. The farther that we get apart from supply and demand, the prices are going to drop. We're going to see homes sit longer. But because they've stayed fairly close and that supply level has stayed really level, as soon as demand starts to come back, housing rebounds really quick, and that's what we're seeing right now. It'll be interesting to see what happens in the coming weeks if this trend continues. So now let's look at, we've looked at demand, we've looked at supply, we'll look at the closings. So this is expected. We saw a lot of closings before March, before the stay-at-home order. Then the closings took a sharp decline, and I expect these will start to rebound slightly because all these homes that are in escrow are going to close. And as they close, we're going to see that go up. So it will just be whether we've bottomed out on this or if it's going to turn around in the next report. So maybe in a couple of weeks, we'll really see what happens here. So now looking at supply and demand, what does that affect on market time? So if you're going to sell your house right now, how long is it going to take you? Right? Everyone wants to know that. They want to sell quick. They want to sell for the most amount of money. That's the most important thing when you're looking at the housing market. So when you look at this, right before the stay-at-home order, we were running about 50 days, average days on market in Orange County. Hot sellers market. COVID-19 hits, all of a sudden homes start to sit a little bit longer. Understandable. First several weeks, we couldn't even show properties because real estate wasn't deemed essential. So homes were sitting. There wasn't a lot of activity, right? So we peaked out at about just over 120 days, which really, when we look at this chart right here, 120 to 150 days is a slight buyer's market. We barely touched into the slight buyer's market. Okay, now we've dropped down to about 86 days is the average days on market in Orange County. That is a slight seller's market, and we've already moved back. We were in a hot seller's market. We touched base on a slight buyer's market. Then we went into a balanced market, and now we're back into a seller's market. And that all happened in a matter of weeks. So again, we see this upside down V or slight U, I guess you call it, but we saw that big recovery, and that's why housing is recovering so quickly, and also why you're not seeing a big drop in prices. Pretty interesting numbers, right? Before we went into COVID, we were in a massive seller's market. Homes were moving very quickly. Homes were appreciating fast. We saw 6.3% appreciation in the first couple months of the year. When COVID hit, everything grinded to a halt. We saw demand take a nosedive, but supply didn't increase anywhere near as fast as it typically does for this time of year. So because our supply kind of stayed steady, when demand started to rebound back, it was a quick recovery. So we're really in that recovery phase right now. It's going to be interesting to see what happens as we move deeper into the summer market. Right now, in Orange County, we are in a slight seller's market. It's hard to believe that even though there's so much going on right now in the country and in our state, that we are still in a seller's market. But that's what the data is showing us right now. We are personally seeing multiple offers with our buyers, with our listings. It's really a hot market right now. Again, depending on your price point, of course. But if you are thinking about selling, it is time to have that conversation, because right now you may be able to capitalize on this market. If you guys like this video, make sure you subscribe, hit the little bell so you're notified every time I post. Again, I post every week about what it's like to live here in Orange County. We talk about restaurants, food, the market, neighborhoods, parks, things to do. It's just a great way to find out what it's like to live here in Orange County. If you have any questions about buying or selling or moving to the area, or if you live here already and you're looking to make a move, make sure you give us a call, shoot us a text, send us an email, just get in touch with us. We're here to help you in any way that we can. I hope you guys all have a great rest of your week. And until next time, take care, everybody.